is the work is on unlocking insights, navigating perceptions of data privacy and data credits. With me here, we have Oluwabunmi Falebita, which is my co-author here. We send greetings from Nigeria. Okay. Basically, the focus on data privacy is quite interestingly recent. And sure, this data credit has been a regular thing that's been discussed across different concepts. Here's my table of contents. I'll be going through introduction, the review, the methodology, the results and discussion, and the conclusion of the recommendation. Okay. Introduction. Sure, data credit is a very popular issue in the Western world. When LMI says, it appears that it's quite recent, where data credit is being introduced to increase financial inclusion, to help give access to individuals, small businesses that have little access to finances. So it represents a major financial option for short-term loans for the survival of the poor and the needy in LMICs. Nigeria is one of the LMICs. And basically, it has increased the prevalence. The prevalence and increase and of data credits in LMIC has increased in recent times, and this is well understood because ICT devices, the adoption of ICT devices in LMICs has increased also. So it seemed to grow alongside with the adoption of digital credits. Interestingly, this has resulted in increase in data and financial inclusion, meaning the adoption of data credits in LMICs is quite an interesting thing. It is good. Well, its adoption has resulted in short-term loans being given to the poor and the needy, short-term loans with little or no collateral times, easy accessibility as against what happens in regular banks where they might need strong collaterals, serious documentations, So the poor and the needy get access to credit quite easily and very fast. However, there are data privacy concerns because users in LMICs have little understanding or knowledge and awareness about issues of data privacy. It appears that the usage of the data collected from users might not be well managed. And this is the focus of this research. DCPs, I refer to data credit providers, they have, because in the light of the non-awareness of users in LMICs, having collected the data for credit scoring, could have been reported to use the data for issues that are beyond credit scoring. Consequently, the lack of awareness and genuine consent from users as presented as consent issues. In a more times, we found that they collect data from these users even without their consent. They get access to their phones, they get access to their contacts, and then possibly contact people on their lists to inform them of issues that should not be made public. Oftentimes, DCPs have also been required to get involved with understatements and concealment, where there are hidden issues. They do not declare exactly what they intended to use the data for, and the users just suddenly realized that they were involved in things they never knew they were involved in. So we question how ethical these practices. And let's uphold that the digital data privacy is a fundamental human right that should be upheld. And while we do encourage the usage of the adoption of data credits, uphold data privacy is quite core to its adoption. See, so of course, there's been reports of coercive payment return tactics, it's about spectrums. And this is the cover research. You need to move faster later. So we say that now there's a strong need for effective regulations because it's clear that privacy value differs across demographics. Different people have different value for privacy as a reason of how much they know and what they understand about it. And we also know that the management of data privacy has influence on individual well-being because what's infringement of data privacy could cause issues of shaming. It could have issues with their finances in the future, and it could see it covers a large spectrum of issues that we will see in the findings of the research. So, okay. Now, in Nigeria, for example, like other LMICs, we identified that there are regulatory gaps where the regulations, the laws, and the provisions for data privacy is not clearly spelled out, and it might be an issue of interest. Okay, having set that background, we're now far to see what the literature says about these studies. So first, we'll review that three broad concepts, talk about the broad context, saying that prior studies often observe that data privacy issues are not often neglected in LMICs. Some other researchers identified that data credits affect DCUs welfare, but the issues of data privacy and the ethical implications have not been focused on. So that shows a depth of research. Okay, others highlight the negative impact of data credits on data privacy in LMICs and shows that there are knowledge and regulatory gaps. In this sense, we look at the concepts and the people look at the concept of privacy, try to define it. We looked at the concept of data privacy and see how it stands out unique. We looked at the sensitivity of information and what we define as sensitive. Okay, briefly, we'll say that lesson 2017 identified that try to define data privacy as exercise authority over safeguarding one's online data from unwarranted intrusions. Okay, we'll try to identify the sensitive information, and it appears that it might vary from place to place and from time to time. But from Mill et al., he identified that there are two groups of data that could be perceived as sensitive. He called the first one the secure identifiers, and the second one, the financial details. Secure identifiers refers to issues of social security number or national identification number, as it is called in different climes. And financial details has to do with issues of related bank accounts, credit cards, often identified as sensitive. However, basic demographic information are often not considered as sensitive. Okay. Based on this background, we try to look at what happens in Nigeria as an LMIC. And the study focused on Nigeria precisely, to focus on LMIC South Africa. And the interest is to bring understanding of perceptions, experience, and expectation of users in this LMIC. Okay, and indigenous data for policy formulation and contribution to academia is the impact that we expect that this study will bring. Okay, now how was the study done? Okay, the methodology comprises of, of course, I'll discuss the design and the setting, the sampling, the instrument, the procedure, and the ethics that was important for this research. So first, this study was purely a qualitative approach because we see that seeing the perceptions, the experiences, and the expectations of data credit users would be better approach from a qualitative perspective, where individuals could express their opinion without being boxed to a corner. So, the cross-sectional survey and the qualitative approach that went across different parts of Nigeria. We use in-depth interviews with data credit users. Those are the criteria for inclusion, where then the individual must have used data credits, which in this sense were mobile loans in Nigeria in the last couple of in a specified period. So as far as the is has used one before, he's qualified to be a part of research. But having an opinion of someone who had not used them before would not be allowed to be a part of the research. Okay. Yeah. High prevalence of DCUs in Nigeria was a reason for us to focus on Nigeria. We identified that Nigeria has kind of more DCUs. In fact, the 21 report by FINA showed that 5% prevalence of subscriptions to digital financial services in Nigeria. So Nigeria is quite qualified to do it. So we use a multi-stage sampling technique, where in the first stage, there are 3 stages. The first stage, we use the purposive selection, sampling to select the southwest zone of Nigeria. Why was southwest zone considered? Southwest zone was considered more because, well, the southwest zone is one zone out of the 6 zones that in Nigeria that has a high level of economic activity. The Lagos of Nigeria is well known for high economic activity, and the states that are sort of close around Lagos seem to have that too. So in a way, we'll focus on one zone as a cluster to represent the other clusters of Nigeria, the other 6 zones. And so in that sense, in the southwestern zone, we consider Lagos, the major economic hub of Nigeria. We consider Oyo State. Oyo State is a bordering state to Lagos. So a number of the characteristics in Lagos are shared with Oyo. Same with Ogun State. It's also a bordering state to Lagos. So it is more higher. There's a high likelihood that data credit users, both individuals and businesses, would have a high preponderance in this area. So that was the first stage, using purposive selection to select them. Okay. So in the second stage, we considered in each state 4 local government areas, that's the LGAs, were possibly selected also, so that the 4 LGAs were selected based on the criteria of either being a central business district, a rural area, urban or peri-urban. So each of these were represented. So in every state, we considered an LGA that was a CBD, a rural, a urban, or a peri-urban. So in that sense, in each of the LGAs, 10 DCUs were interviewed. And so in each state, we had about 40 interviews, and all of other countries in the 3 states, we had 120 interviews. We intend to do 120 interviews. Okay, so to select the final participants in each of the LGAs, we'll use the systematic random sampling, where we decided the end stem for each LGA based on the number of households that were in each LGA. So that's how we selected each of the households that were approached to identify if there were to be a DCU there, and if not, to move to the next end house that varied across different LGAs. Okay. The instrument was Straw Interview Guide, which was developed and validated. We engaged the phase and content validity process. And the final items, we had 20 items, with which 5 of them were demographics and 15 interview questions with their own probes. Each question had their own probes, which could get to dig deeper and identify, the other directions to the ideas that were shared by the users. Okay, the interview, we recruited research assistants, and which were trained in using the instrument and then deployed. Okay, so the IDUs only considered consenting users. So only users who were willing to be a part of the research were. The interview transcripts were cleaned, coded, genetically analyzed using NVIVO for 10. Okay, so ethical approval was obtained for the research also in the via NHREC, that's National Health Research Ethics Committee in Nigeria. And now what are the findings of the research? Okay, first, one of the things we clarified, we asked were the perceived sensitive information by DCUs. What information do they think is sensitive what information, among all the information that the data providers request of them, which ones do they perceive that it is sensitive and releasing and eventually to be compromised, it is an issue. And here is a word cloud that just from NVIVO that shows the information that they perceive as sensitive. And of them, you will see, and most of them, we can see the credit card, the contacts, phone, their phone numbers, their passport, the details, NIN. But the one that is large amongst them is BVN, showing that a larger number of participants feel their BVN. BVN is a short form for the bank verification number. It's a number that totally that connects them to their bank accounts. And here in Nigeria, every individual has one bank verification number that links and connects to all bank accounts that one will have. Means that access to one BVN gives access to someone, to the individual's financial record also. And BVN being one of the highest or the most sensitive information passed by DCUs indicates that the DCUs see it as critical in identifying their banking activities. And they feel that there's a level of vulnerability when they give this information to DCUs. So they pass BVN as sensitive. And it's perceived to be sensitive to their privacy. Means that they feel naked, they feel vulnerable when DCPs collect their BVN and they feel that there's a part of privacy that has been could be breached. Okay. Next, we also asked, each time they asked that you are requested of your request for your BVN among all the information that were identified to be sensitive. BVN, NIN is a national identification number, it's a social identifier, and how obliged are you to divulge that information? Do you have a choice? Do you at times feel, do they give you a choice? Or do you perceive there's a choice to give you that or not? And interestingly, about 63.8%, 63.9% feel they are highly obliged to divulge. But they have not, almost like they have no choice. Because if they do not give access to that sensitive information, they might not get access to the credit they wanted. And it's interesting that a number of them one probe indicated that they are obliged to divulge because a number of times when they request for this credit, they are in a sense of deep need. It's what they need the funds for is quite time bound, and if they could not solve that need at that point in time, there could be a larger problem. So it appears that DCPs know the number of times when DCUs come around to make such requests, because of the intensity of the need, they just give in. So a number of them said, well, they're highly obliged. They will just give the information and walk away and hope that nothing happens. And however, they feel that they are vulnerable while giving that information. Okay. So we will have to ask for the types of risk that DCUs perceive, haven't given that those sensitive information that they might be highly obliged to give. And it shows that having a list of types of risk that were mentioned by DCUs, they mentioned contacting, they give access to their contacts. Okay, that's an interesting part. That a number of them report that when they are doing this digital credit, but on the app, the DCPs will request for access to their contacts. It means their phone contact. It means that DCPs could access everyone on their phone list, and then they could decide to call somebody. So one of the risks is they feel that they might actually get to contact some of their contacts in that sense and maybe public shame, and harass them. There's been reports of times when they will call their boss at work, and then reports that so person is a debtor and he has 3 days left to pay a particular amount, and there were reports of calling their parents, their friends, and it has been embarrassing. So they feel they are at risk of their contacts. They are at the risk of data breach or misuse, shaming, of contacting their guarantors, or financial risk scam around it. So of all of them, it appears that the highest risk that they perceived by DCUs were being at risk of a financial scam, of financial risk of scam, and that's about 60%. It also shows that DCUs actually feel vulnerable at a point of doing this. And okay. The workload shows all the risks that DCUs noted, fraud, fraud seems to show up over and over again on the workload. Okay. So what's their reaction? When I perceive that there's a privacy breach, well, what are their reactions? So oftentimes, when we ask that if they perceive there's a privacy breach, what will be their response? So 70% indicated withdrawal. What we term the breach motivated withdrawal means that when they perceive that there's a privacy breach, there's a likelihood of a privacy breach. Most of them will agree that they would withdraw. And so, the follow-up question will have been that are there indicators of such privacy breach? How do you know there's a likelihood of a privacy breach? But it appears, I've been proved that DCUs in LMIs like Nigeria do not have a clear signal to privacy breach. So while they would have loved to withdraw, they are not sure, they would not be able to withdraw because they don't have any indication of such. So they also asked if they would love to have access, the desire to control how their information is shared and used. And of course, a larger number of them said yes, they would love to have access to control that data, how their data is being used. Yes, okay, that's what out. Okay, so what are the excerpts from this? Basically, first is concerns about financial security, privacy, and identity protection and social consequences are key to the use, to the access of to the data of data credit users in the growth of data credit in Nigeria. There is a strong need for robust security measures and transparent data handling, as well as ethical communication from the side of the DCP, so the DCUs can truly trust when their information is being given, and be sure they're not at risk of data privacy breach. Okay. It's also identified that it means the DCPs needs to prioritize security and confidentiality to foster trust from the DCUs. Okay. There's a need to empower DCUs with greater control over their data and to enhance awareness about data privacy practices among the DCUs. There's a DCUs desire for control over their data reflects a need for autonomy, privacy, and trust. This is central to the relationship between the DCUs and the DCPs, so that they can actually have the business going and the financial inclusion that is increasing can continue. There's a need to empower DCUs to enhance transparency, accountability, and ethical processing there. There's an obligation to divulge information information varies with individual circumstances and financial needs. And I think I want to ensure that my time is well used. Okay. Now, purposefully withdrawal reflects a need to trust and transparency. Addressing privacy concerns builds a resilient and trustworthy data for this ecosystem. So it's central to it. Okay, thank you. This study was partly was sponsored by the DCO and SEGA under the Bill and Melinda Gates Foundation. Thank you. Questions, contributions?